Okay, good afternoon, everyone. And welcome to the October meeting of the International Model Stock Investment Club. Before we begin with the agenda for the evening, we will go through just the disclosure that you see in front of you. The information that's presented today is presented for educational purposes only and is not intended to be any sort of recommendation to buy or sell any of the companies or the securities mentioned today. The views that are expressed are those of the participants only and do not represent the views of Better Investing or of any other chapter. Investors should conduct their own research and analysis before making any investment decisions. And any of the securities or companies discussed today may be held by any of the presenters in their own personal portfolios. These presentations may contain images of websites, products, services, not endorsed by Better Investing or by any of the presenters. This meeting will be recorded and it will be posted to our YouTube channel at the conclusion. Now, for today's meeting, we have, the agenda here. So we are going to have first, Reddy will present the Treasurer's report and the portfolio management update for the month. So I would ask Reddy if he's ready to take on the screen for this evening.
Okay. Can you see my screen now?
Yes, we can.
Yeah. This month's total summary is given here. Deposited $1,500 last month after our meeting, including a new member Mahesh Rupawala. We bought Google 1.1 share for over $3,000. We bought FAF 21.6 shares for nearly $1,400. We sold two stocks, Comcast and eBay, all the shares that we had, with nearly $6,500 proceedings. As of now, we have a cash balance of close to $3,500. But I want to stress one point here that tonight after the meeting, I will deposit $1,500 new deposit from club membership. So we will have close to $5,000. And if you want to make any decisions tonight to buy, we should think about the $5,000 cash balance. Membership is updated in my iClub, and stock assignment is also updated. The heat map shows our largest stocks are basically Facebook, IAPR, Schwab, Disney, and Algonquin AQN. And our total portfolio is $72,000. Cash balance is $35,000. Our club portfolio is still shows a couple of stocks as largest percentage, exceeding over 5%. One of them is Facebook, other one is IAPR. All others are nearly 5%, or except Disney's 9%. Next is a company diversification. Our diversification with large and mega combined nearly 45%. Mid is somewhere about 40%, and small is nearly 15%. Our sector diversification, we have a kind of a large percentage than probably what we desired in communication services and financial services. We may consider more diversification. Portfolio industry diversification is again, internet content is more and entertainment content is high. The performance this year is kind of lagging behind Vanguard 500 index and Vanguard total stock index. The My iClub lets us only these two indexes comparison, but over 1 year we are doing okay. 3-year we are doing better. Lifetime we are about in par. Our club membership includes, I mean, the status is as of now, this is the total cash balance for everybody and percentage of the club membership ownership. Portfolio gain, we kind of slightly negative on Biomarin and iRobot, Qualis and Vertex, but Vertex is really pharmaceutical, very highly volatile. That's a little longer range we should observe. I had a chance to analyze 3-4 months ago. That's how I can say that. Our club assignment status I updated, and this is the list as of now. If there are any changes, please let me know. Thank you. This is the treasury report.
So I can pick up the portfolio report from here, Mina, in
Perfect.
that the small stocks, as far as our diversification is concerned, is 16.5, and our target is 25. So we'd like to increase our small stock portion of the portfolio. Our medium is at 38.6, or 40-ish, as Reddy was saying, but we'd like to have that up to 50, and our large is at 44, and we'd like to reduce that down to 25. The total return is 13.9 on with Friday's prices, and our largest holding is Facebook at
Tom, can you take the screen? I don't see your screen.
Yeah, I don't need to. I only got one more thing to say, and we own 15 stocks, and that's the end of my report. So you can go on to Mina's education presentation.
Unless anybody has any questions for our Reddy or Tom.
Right.
Okay. Barring any
There is one comment. I think Tom and I figured it out. Earlier today, I saw email. I think Domino's Pizza, or it's a typo. It's a missed, but it has been corrected. It's not a sale recommendation in Tom's report.
I'm sorry, Ray, I'm not sure if. Oh, okay. Yeah, and I think we are going to be speaking about Domino's a little bit later in the meeting, so I think we'll make sure to go through in detail then. So I wanted to, as a quick education topic today, propose maybe a new or updated method of having kind of daily or regular communications with the group. So I'm proposing that we start or adopt a Slack channel to reduce maybe some of the emails or some of the confusion with subjects and the bodies of the emails. I find sometimes we have some issues in Slack. I think presents a good opportunity for us to streamline some of the communication and organize the information. So Slack is both available on website and Android and Apple apps for the mobile devices, but it basically is a chat system as well as a document exchange center. So you see here that this is the general overview of when you do sign up. I believe I've sent an email invitation to a good portion of the members, just as a bit of a pilot to see if we could get everybody on successfully. I think most of the executive are on now. I'm not sure if everybody's received that invite. If not, just shoot me a quick note, just so I don't duplicate emails. But in any event, this would be the page you generally see once you signed on to Slack. Slack is organized by channels. You'll see that on the left side. Their channels would be subdivided into either projects or specific interests. And we could add members depending on, for example, subcommittees, the executive. We could have channels to discuss quarterly reports before they come out. follow-up questions for education topics, etc. And allows us to, organize some of their conversations and allows it to be saved and archived. That way we can find them. You'll see that there are notifications beside it, so you'll see that there's a number of messages if you've missed anything, or since you've last been online, or if you don't have the notifications directly to your cell phone. Slack also allows us to do direct messages between members of the same channel of the group. So any specific questions or any planning, scheduling for meetings or any sort of collaboration, it's quite helpful. So this would be, if you're inside of a channel, this is what it generally looks like. You'll have yourself identified, your text, whatever information you're sending when it's sent, and you can attach documents. You can attach Google Drive documents as well and share those hyperlinks. So that's useful for the current investment club, because we do use Google Drive for most of our collaboration. And you'll also see circled under Lisa's response to Harry that there are reactions to any of the comments, so people can acknowledge receiving it, like or dislike to see sentiment. So it is, not everything has to be a full message back. And so this is if you were to send a message in Slack. If you were to open the message, you can add notes. You can tag individual users and mention teammates so that they're alerted to the fact, and they're able to filter searches based on anything that they're mentioned into. So for example, I can search my own name in Slack and I can find every message where I'm tagged in it. And so that I can organize information, or if I've been sent an attachment, someone can bring it to your attention. We can edit the messages as you see there and delete them if necessary. At the bottom, we can attach files, as well as the Google Drive. As mentioned, we can share the links. So see there, the history just allows you at the top of Slack, allows you to go back and see some of the channels that you previously visited, or to some in the same chain of events. You can search by either teammate, keyword, document title, and anything related to that will come up with Slack. And of course, there's always the help option. And I believe their customer helpline is actually quite robust that way. So I wanted to propose this to the group. I find that we do exchange quite a bit of email for regular communication, which is great, but it makes it difficult to keep track of the conversation, of responding to the right person, ensuring that everything's updated. And then the difficulty I find also is archiving the information, because obviously the conversation evolves and leaves maybe the strict subject line of the email chain. So it becomes a little bit difficult to retrieve information, I find, once it's been sent out. So of course, emails would work in tandem with Slack. The proposal or the education topic would here be that emails would be for more formal announcements, or for things that we want to record separate and apart from the continuous dialogue. And we would organize Slack channels based on the different criteria. We'd have one for 10K reports, annual reports, education topics, committees, subcommittees, the executive, etc. And so that left some time in the agenda for people if they have any questions or concerns. And I'm going to, at the end of the meeting.
Yeah, hello, this is Bernard.
Oh, hi, Bernard.
Oh shit, nobody can hear me.
Hi, Bernard.
Hello, this is Bernard.
Hi, Bernard, we can hear you.
Nobody can hear me.
So as I was saying, I will send out a link invitation to all of the group members either later this evening or tomorrow. I'd ask that invite you to sign up. I'll have a few channels set up. Just give it a try. We'll see if anybody's interested, and if it's easy to navigate, if it's something that we find beneficial. And then my proposal is that next meeting we either make a motion to adopt Slack, or if there's if it's not popular, if it's not something that we find useful, then we can just leave it in the tried pile. So if there are any questions about Slack, anything about the communication options we have, then I'm happy to answer. We've left some time in the agenda for that. I'm not sure if Bernard, if you had a question.
Meena, I have a couple of minor questions.
Yes, sir.
This is still a private company.
Yes.
And I'm not sure if you did mention any major problems that we are having with the present systems that are in public company domain.
Sorry, I'm not sure I'm following. Oh, in terms of issues with this being a private company and the potential of investing in it as well?
We are right now having GoToWebinar site. Okay.
Yes.
And do we have any serious problems with it that you want to switch to?
So this would not replace GoToWebinar anyway. This would be for between meetings communication. So instead of having everything sent through email, chain emails to the entire group, communication would move from email platform to Slack for the majority of things.
Hello, this is Bernard.
Hi, Bernard. Okay.
I don't think he
sorry,
can hear us.
does that address your concern, or does that clarify something?
Yeah, I was wondering how, I'm not familiar with Slack, but how easy it is and how it avoids the cumbersomeness of email that we are having. Okay.
Right. So it would just to replace some of the emails. I mean, just we do have significant change information or people having conversations about, for example, quarterly reports, and I think this is what we want to encourage in the group as well, is discussion before the meetings between members, that they can review an SSG that's been proposed. If they have questions, concerns, if they have a conflicting SSG, for example, or a different opinion on projections, then that's somewhere that it would, I think Slack might present an alternative way for us to have that conversation as opposed to emails.
Maybe
GoToWebinar would not be affected in the way that we record and continue to hold our monthly meetings wouldn't be affected by Slack.
Maybe you can start conversing through Slack to the club members and see how it works for a month or 2 months, and then we can come back to this topic.
Well, exactly. So that's what I'm saying, that at the end of this meeting or the next day or two, I'll be sending invitations to everyone and invite you to join Slack and join the channels for the investment club. And maybe at the next meeting, or if you think 2 meetings would be, if we want to allow more time, we can then put it on the agenda whenever, if it's appropriate to put on the agenda.
Yeah, I'd like to hear other members' opinions on this, but that's okay.
Of course.
Hi, this is Mahesh.
Hi, Mahesh.
I'm using Slack for 2 organizations in which I'm a member. Yeah, I mean, I find it useful to keep updated on what's going on in the organizations because it's like a messenger-based app, so I'm quite comfortable with Slack.
Great. And Mahesh, in your other organizations, do members use Slack to exchange documents attachments as well, or purely for messaging purposes?
Well, they have yeah, it's more for information. I find it very useful to keep updated with what's going on in the various channels. So they, like, one of the clubs I joined is a program that I'm doing, and they've got various channels. So there is a discussion channel, and then there is a news channel, and there is an update on your courses that you're taking. So I find the discussion I find it quite interesting because the discussion, you can have any discussion with anyone you have, or you can have a group discussion. So
Perfect.
I guess, the more forward-looking organizations are adopting Slack.
Mahesh, I have a question.
Yeah.
I have a question. Just like email, we don't have to be online to check the email. We can come back later and to check the email. But does Slack also wait for you to come, or you have to be online to?
You can, it works in the same way as email or any sort of other messaging service. You have the message unread until you open it, read it, and respond. So it's not a live, not necessarily live communication. It can be if both users are online, but not necessarily live. No.
Yeah, I've got it on my mobile, so I've got my email and Slack on mobile, so it's always on. Yes.
I think everybody is trying to cash on social media and okay.
Yeah, so I also use Slack with another organization that I'm a part of, and yeah, I find it does cut down the number of emails and allows organization in data and information. So well, I think people are generally kept better updated because I find a little clearer in terms of how news is presented, and you can see the chronological order and back and forth of it. But
Meena, please correct me if I'm wrong. This looks like more like a chat room than email, right?
yes, exactly. So yes, it looks more like a chat room. It's exactly any sort of group chat messaging system. So the user will be identified, their message, and so the benefit of Slack, or the usefulness I find, is the channel, so that we will have very specific subjects for each channel. For example, one channel could be a general discussion for any sort of conversation. One channel will be specifically for review of SSGs and quarterly reports. So if people have questions about the quarterly reports for the next upcoming month, that would be the channel in which they could pose their question, their concerns, share their projections or their opinions, and have that pre-meeting discussion.
So how it is different from like Microsoft Teams chat room?
It's pretty similar. I believe I believe there are yeah, you're right. There are channels on Microsoft Teams as well. I think the only difference is this is free. It's cross-platform. So I think it's a little bit more accessible for people in case they don't have the Microsoft account. I think with Teams you need to be linked a little bit better. I'm not sure how to organize with it. Slack is just simply a website and the app. So that's why my first inclination was towards Slack, or that's why it was selected as a presentation or for an education topic today. So it is similar to Teams, though. If you do use Teams regularly, this would be something that yeah, that would be a very close comparison.
Yeah.
I would like to hear the response from Mahesh also on how it is different from Microsoft Teams.
Reddy, you are invited to Slack. You have not logged on
Right.
yet. And
He hasn't logged on
we
yet.
can see you. So why don't we try it out? Because right now we have 4 different channels.
Right.
So it's just a tryout. See if
Okay.
that can improve our communication, discussion versus email. If we hate it or does not really improve any of efficiency, we don't have to use it. Just give a try.
Exactly.
Okay. Sure.
So Mahesh, I'm not sure if you have any comments on.
Sorry, no, I haven't used Teams much. So when I went on Slack, I found Slack was much easier to use and very intuitive than Teams because, but frankly, I'm not in a position to comment because I haven't used Teams that much.
Mm-hmm. No, I appreciate it. Yeah. Okay. Well, unless there are Reddy, do you have any other questions, or any other members? Are there any other questions?
Even if I have, I don't want to ask because I'm the only one asking questions.
No, Reddy, please feel free. I mean, this is the time. Please don't hesitate to ask.
Okay.
All right. Well, I'm available by email if you've changed your mind. At this point, I think I'll hand it over to Tom to take us into our stock study today. It's a consumer cyclical sector challenge. I will not try to say that 5 times quickly. And let me see if I can make you a presenter, Tom. Perfect.
So you can see my screen okay, guys?
Yes, we can.
Okay, so we're doing the consumer cyclical sector stock challenge. And so the goal of this was to go through our sectors and see if we could find the best stocks in the sector to put in our portfolio, and we would challenge the stocks in our portfolio as we go through. So we're going to go through why did we pick this sector. Well, it's the second sector. We did the communication services last month, and we're doing the consumer cyclical sector this month. And why are we doing this? Well, we tried to improve our overall portfolio return, and we looked at these are the stocks that are below our 13.9% in our portfolio, and could we find do we own the best stocks in the sector? And we're on the mission to try and find that. So looking at the consumer cyclical sector, it's the companies that produce goods that are affected by change in the business cycle. Most cyclical companies sell discretionary items. The consumer cyclical items can be luxury items or other discretionary spending. The cyclical stocks are viewed as more volatile. They offer greater potential for growth, and investors seeking long-term growth manage volatility tend to balance their portfolios across the sectors. So this is from the heat map for this consumer cyclical on the BI site. So this is the top 100 tickers are captured in the last 90 days. So Amazon, so the greener these are, then these are the stock, and the bigger they are, more stock selection guides were done on that particular stock, and the greener they had, the better return. So you look at Amazon now. Domino's is not shown in this sector because either there wasn't, well, I guess there wasn't just enough people doing stock selection guides on the stock. So these other stocks that we looked at were Malibu Boats, LCI Industries, which is another recreational vehicle company, Metafest, and LGI Homes are the companies we looked at. So this here's a graph just showing you the S&P is the lower light pale blue line, and the consumer discretionary consumer cyclical is a dark blue line. So this is the 5-year performance. The 10-year shows a similar line with the consumer discretionary beating the S&P 500. If you go to the 1 year, or the S&P is beating the consumer cyclical, which may be in our favor because it's maybe a little out of favor. So we did some stock screens, and we came across these companies. We took out Canada Goose. We thought it failed the up, straight, and parallel test. Again, we're looking for small and medium companies because, as I said before, we have 44.6% large, and we'd like to reduce that to 25%. So DH Horton was a large, Alibaba was a large company, and Borg Warner was a large company. So we rejected those companies, and Gentex failed the up, straight, and parallel. So we ended up then with Medifast, Malibu Boats, Domino's, LGIH Homes, and Amazon. And so Amazon has historic historically for the sales and the earnings very high. So it looked like a keeper in the portfolio. And whenever we looked at the management uh, comparisons, those ratios, this is what really impressed me whenever we started looking at why people were looking at these stocks. They have pre-tax profits seems fairly high across the group. The earned equity was high for the the stocks that we selected to look at, and the debt to capital was high, sorry, was reasonable for the companies we looked at. Now, if we look at Domino's, its pre-tax profit was in there with the others, but its earned well, earned on equity was minus 11%, and the debt to capital was 1900%, which is far out. Both of them are far outside the guidelines that BI would suggest. So this was the area we looked at with some concern about Domino's, and again, it was 1.4 for the upside downside ratio. It looked overvalued at 122, and the PEG ratio was 3. So that was why we picked Domino's as the stock to challenge in our portfolio. And then we had Medifest and Malibu and LGI Homes. And on the LGI Homes, we're looking for a company that we thought we could invest in, because we thought that a lot of the times, whenever it may have been proposed to buy some more Domino's, we looked at the PE being very high, and we thought that with LGI Homes, low PEs, it had 3.4 to 1 upside downside. Its relative value was 87%, and the PEG was only 0.8. So it looked like that would be an attractive company to do as a challenge. Again, just looking at the size of the companies, is the size, the Manifest was a small company, as well as Malibu Homes being a small company. Domino's was a medium-sized company, and the LGI Homes is a small company. So that is why how we got to do the challenge between Domino's and LGI Homes. So now we're on to Mahesh for his part of the portfolio discussion. So can we switch?
Right.
So are you going to talk from here, Mahesh? Do you want me to move on for you, or you got your own?
Yeah, I appreciate if you could move on from here.
Sure.
Okay, I think Domino's, I think there's updated because last Thursday, Domino's announced their results for the third quarter, and the results came in below analyst expectations. Sales was 997 versus 1.03 billion the quarter before, and pre-tax profit was at 134.8 versus 145.1 the quarter before, and earnings per share was 3.24 versus 3.06 the quarter before. Now the earnings per share went up because in the last quarter, in the third quarter, Domino's did an aggressive buyback of they spent about 1.1 billion to purchase their own shares. of that, I think it was principally funded through bank. If I'm looking at the cash flow, it was principally funded through bank borrowings. Okay, what's the next? So I think the result announcements, I think management did update that they were facing pressure on staffing pressure. They were finding it hard to staff their outlets because labor was not that easily available. There's apparently a labor crunch. What boosted sales was actually their international sales was doing slightly better than their local US sales. So I think that's the update on the third quarter. I have actually in the SSG updated, but let me just go through this remaining slides on the presentation. I think it's true that what Domino's is. I think one of the concerns that we had when we discussed this and we looked at it, the challenge was that DPZ their equity is negative, and that's because of their aggressive share buyback. So the debt to equity ratio will show a negative amount, and it's higher than the 30% that BI recommends, as the maximum debt to capital ratio. Okay, next slide. If you look at the big chart, I think what it's showing is that Domino's share price has a very decent run up in the COVID period, but it reached a max of about 500 and it's dropped down recently. But if you look at the PE ratio, is currently trading at the above the average high PE of 36, so it's trading at the sell zone in this chart. Now, next slide, please. Now, I think it's still. I think one of the things that we found attractive about Domino's is that it's actually taking a lead on investing in technology to be more efficient and streamline its operations. So it's continuing to invest in the technology part because it wants to be very efficient in the quick service restaurant business. So that means that they have to have a technology system that enables them to deliver pizzas timely, and I think it's doing that quite well. Next slide, please. Well, this is the share price. I think this is outdated. I think we can skip this. Okay, this is what I think I mentioned. Because the equity is negative, you get a percentage earned on equity, and negative, and look at the debt to capital ratio, it's very high. It's above the 30% that BI recommends. Anyway, is there another slide, Tom?
I don't think so.
Yeah. So I don't know, do we want to look at the SSG, the updated SSG that I have? I can run through that if you could share the screen with me.
Sure. Okay.
Okay, so I have updated the quarterly results. You can see my screen?
Yep.
Okay. So I've updated. Let's go to the. So as you can see, the third is updated for the third quarter. The EPS. This is a trailing 12-month based on the third quarter results. Is 13 points. It's in line with what we originally projected. Pre-tax profits. So it seems to be in line, but I think what the difference is, if you look at, I'm keeping the historical sales forecast at 7%. This is what the last update we did at the last meeting. So I've not changed this because this is based on our analysis of what the analysts were projecting. Morningstar, I think, was looking at EPS, long-term EPS growth of 11.6. We moderated to 11%. So I'm keeping this unchanged. I think Mina, when he was following this, he used the same percentages. So I looked at it and I'm keeping it the same. Now, if you look at the valuation parameters, I've not changed this much, but what I've changed is actually the price now is 545. I've kept everything the same, updated for the pricing, and we still get a whole with a forecasted high price of 668.4 versus a closing price of 543. Now, what I want to highlight is that, although it shows a whole, if you look at the compounded annual return using the forecast high PE, it's a 7.9% appreciation. Based on the average PE, it's only a 5.5% appreciation. So and this is a medium-sized company. It's below the 10%. So from a portfolio perspective, this portfolio has actually done quite well since the day we invested. We invested it in 2019, and at that time, I looked back at what was the SSG and what were our assumptions at that time. And at that time, we were assuming a sales growth of 9% and an EPS growth of 15.5%. In September, when we did the latest review, we actually had moderated it down to 7 and 11%. And what that means is that we have lowered our growth expectations compared to the day we first invested. So I also looked at what were the returns we were expecting when we invested in October 19. We're looking at an annual price return of 15.1% based on the high PE and an average annual return of 12.7% based on the average PE. Now, in our recent stock study, that return that we are expecting is lowered. So, and although it says high, we believe that the price has actually risen up to a sufficient level now that that the returns going forward may not be as high as the average portfolio return. So that's something that we need to consider. Although looking at our current high price, of 664 versus the current market price of 454, there is still room for an upside. Okay, that's my view, my analysis of DPZ.
Mahesh, I have a question.
Yes, please.
Your high P ratio 30, which looks kind of very low compared to the historical value.
Yeah, I think the reason is that we sort of have discounted the 20 high of 35 because I think this is a COVID period, and there was a rush in such stocks which were supposed to do well in the COVID, in the pandemic. So there was a rush for stocks like quick food delivery stocks and all that. So if you look at before, we see that before 2020, the PE ratio has been coming down, and so I've put it.
I thought doing well
is a reasonable.
I thought doing well during the pandemic time is a positive, not a negative, is it?
Well, if you look at it, we are projecting for the next 5 years, and next 5 years, if a pandemic goes over, then things return back to normal. I think 2019 being,
Okay, the previous 5 years is anywhere 36 to 40. Okay. I thought 30 looked a little low.
Yeah, but yeah. So
I
Let's see
think he's
if I
looking the
change it.
trend. If not looking at a 2020, you're looking the trend is trending
Yeah.
down. Ready.
No,
So
no,
if not counting 2020, the trend is going down.
I thought if anything, Domino's is doing good, but okay, that's okay.
So I want to understand Domino's. Domino's is doing well because they're opening more stores,
Yes.
franchise, right?
Yeah, franchise
Okay.
stores.
Okay.
Yeah, if anything, it's
I
expanding.
won't say that Domino's isn't doing well. I think it's doing well. If you look at the analysts, I think there's a divided view. There is some sell recommendations, that there are some buy recommendations. So it's a mixed.
It's a popularity is good. It's increasing, expanding business. Okay.
Do they have any specialties or they just like a standard pizza parlor place? Do you
Their
guys know?
specialty in terms of the reason for their major success appears to be the fact that they open so many stores in very concentrated areas. It's called their fortressing strategy. And so what they do is so that they canvas an area so that they can reduce the delivery times much more effectively than a lot of their competitors. And that's really what drives their success on that end. And so that what, as Mahesh was mentioning, their investment in technology is centered around a lot of their app development. So they really did lead in that forefront, as well as self-driving vehicles, so that they can have, with the short delivery distances, less drivers, more vehicles on the road. So that's really what their angle is in terms of the kind of an edge over the competitor.
Interesting. Do you, I don't know if it's a sidetrack. Aside self-driving, do you know what car they're using? Is it Google? What brand of self-driving cars? Or is this the future, like they're projecting going to use?
I don't have the answer right now. I'm sure we can find it, but I think it is something that they're heavily investing in now. I don't know if there's
Oh,
I don't know if there's anything on the road yet.
okay.
But I know that they're making heavy investments in that area.
Mm.
Oh, Jay.
Yes,
Yeah,
Piero.
they also sell wings, sandwiches, little tidbits here and there. That they also do that.
Okay.
Yeah. Mahesh, I have a question for you.
Yes.
Okay, I'm looking at, their revenue for 1 year, and their 1 year's revenue is, let me take a look, $4.3 billion, and their debt is $5.3 billion. They have more debt than they actually earn in 1 year. Now, I looked at what their operations, right? They're using bank loans to buy back shares. And the reason why they're doing that is because interest rates are so very low. Now, Jerome Powell says that, we're kind of thinking about raising interest rates. And we're kind of at the end of a market, so interest rates are going to go up. If the interest rates go up, this cheap money is going to disappear. They're not going to buy back shares with expensive money. So that strategy is going to go out the window. This debt is going to remain very big.
Piero, I have two comments, one to Mahesh and one to you.
Yeah.
The debt should be compared to the total assets or total equity, not to the yearly sales.
Yeah, no, that's right. But it's a big debt. Right?
Those are all real estate, all rented real estate. But my question to Mahesh is, Mahesh, if you looked at peer comparison, Domino's is the fastest growing and steady historical sale among the industry average, peer group average.
Yeah, but Reddy, with such a large debt, way beyond 30% that Better Investing suggests, but it's not well beyond. It's way beyond. It's like 1,000%.
Those are all The
and
so
the interest.
debt should be compared to the total assets of the company, and most of it is all in real estate rental.
Yeah, but these are franchises. The franchisee owns the real estate. All right. So the other thing is this: that if interest rates go up, this debt
No.
is going to become a big problem. This debt is due at some point,
Okay.
right? Now their
Can I just
revenue.
address Reddy's question first, because the total assets as at September 2021 is 1.764 million. Debt is long-term debt is 5 billion.
Yeah.
So you got
So
1.7 billion in total assets,
Yeah.
and debt of 5 billion. So
yeah,
and that's why you have negative shareholders equity of 4.1 billion.
yeah, it's a big problem. If the low interest rate environment remains, sure, they can cover their debt. I think their interest coverage is 4.22. So they can cover their interest payments 4 times. But if interest rates go up, the loaners, the people who holding the debt, they're going to demand more. Will that interest coverage remain at 4.22? The interest coverage is going to fall. If it falls badly, it could be a big problem.
I came across one case before. For example, some companies like car rental companies, where they rent most of the stuff, or they finance most of their stuff, their debt ratio is very, very high.
Yeah.
But that's a typical of that industry.
Yeah.
I'm not sure about the restaurant industry, but I had to check more.
Yeah.
Okay.
Yeah.
No, I think you can look at the chart here. Debt to equity versus the peer group. Domino's is high. Even if I look at the industry average, Domino's is on the high side.
Yeah. But
If I
if you look at, go to historical sales and then go to historical earnings per share, you see historical sales, the sales are 4.1, 4.117, 4.96, 4.96, 4.96. The sales are similar for 2020. 2020. Yeah, sales are similar. Now, if you go to earnings, this one here. But if you go to earnings per share, next one here, historical earnings per share, you see Domino's is $12.39. Everyone else is $1.62. So their efficiencies are very high. Domino's they're very efficient here, right?
No.
There it is.
Yeah.
So
Sorry.
12.39, 16. So they're very efficient, but their debts are scary.
Yeah, but that's what Domino is doing. They are doing a financial engineering where they are reducing their capital, shareholders' equity, so that the number of shares is reduced and your earnings is spread over a smaller base, and that's why your EPS goes up.
Okay,
When
but
your profitability remains the same. Look at historical profitability; it's about the same. Sorry, where's
okay,
it's going increase.
But they're buying back shares with cheap money. It's 1%, but it's not going to remain at 1%. If the interest rates are going up, so that strategy is going to go out the window.
Yeah, if interest rate goes up, and that was one of our concerns too, and that we highlighted that the debt to capital ratio is on the very high side.
Yeah,
it's a very highly geared business.
Right. So
but they're able to pay their debt, right? Every year, they're able to.
Currently, they are
cover.
able to do so.
It has been like over 10 years if you look at your trend, if you go to that page, right?
Yeah.
It's not like just now, every year. So they're able to cover it.
Mahesh,
Yeah.
is the reason for high debt is because they are expanding with new stores so fast?
No. It's well, I looked at the past few years. A lot of it is to finance the purchase. So they are actually they are replacing equity with debt. So it's a capital structure issue. They are sort of gearing up their balance sheet.
So Can we, like, I think this is this type of argument we get in every time we want to buy more dominoes.
Yeah.
Is we have the people that don't like companies to do share buybacks, and we have people that don't like the debt ratio at Domino's, and it's sort of outside the BI rules. So can we just leave it at that for now and just talk about LGI homes?
Yeah, that ratio we have discussed for Domino's since at the beginning when we purchased this company. I remember we had discussion why it was so high. There was reason behind. That's why we bought it.
Right, but we've never bought any more. We bought $1,000 worth of Domino's in, I guess, either 18 or 19, and we've got into these same arguments every time. So that's why this stock is up for a challenge. Okay.
Yeah.
Also, I looked the stock
Jay.
owners. We have at least 3 people own this company, so I just want to.
Yeah,
I
Jay,
don't have
I
it.
actually listened to the recording of the meeting where this was deliberated on in October 19. And I think it was presented that one of the reasons that was high because it was due to some accounting change where leasehold assets had to. I thought there was some confusion because that didn't have a material impact on the debt. So I was a bit confused that explanation was given because the impact that the accounting rule had, where leasehold obligations were reflected as liabilities, the impact was only 10 million. I think what was happening over the past 10 years is that actually Domino's have been buying back aggressively their stock, and it's because the market cap, you see, the equity in the books is historical value. When you go out in the market, you pay a lot more, so that's why it has eroded the equity to almost negative. So again, I think looking at BI principles, it's not I don't think it's a strict rule, but it sort of says that avoid companies with a very high debt gearing ratio, right?
Yeah. Especially at the end of a market cycle.
Are we ready to move on?
Yes.
Okay, I'm going to take the screen. See. Oh, shoot. Sorry, hold on just a second. Let's see. Okay, I am presenting LGI Homes. First, an overview of the home building industry. So there's a desire for single family homes outside of densely populated urban areas. There's a shortage of, actually the shortage has driven sale prices to record highs and is helping home builders offset the negative impact of land, labor, and raw materials inflation. We've seen this in several other home building companies, some bigger ones like D.R. Horton. And there's a deep pool of home buyers resulting in multiple offers for properties and a reduction in the average time a home stays on the market. But they expect that to remain in place. Individuals that were on the sidelines during the pandemic, and so they may have seen their savings grow because they weren't doing vacations or going out. So they're now looking to put that extra capital toward the purchase of a home. Let's see, building metrics indicate that the demand for new homes is still healthy. The nation's employment picture continues to improve, and historically low mortgage rates make owning a home a possibility, even with higher home prices and affordability concerns for some buyers. So those low mortgage rates are pushing new home buyers to start considering owning a home. Let's see. Okay, so LGI Homes, what do they do? So they were founded in 2003. They are engaged in the design, construction, marketing, and sale of new homes. Their markets are in Arizona, Colorado, Florida, Georgia, New Mexico, North Carolina, South Carolina, and Texas. They're basically a central states company. Although I did note, I went on their website and they do have homes in West Sacramento, close to in California. They have, okay, so their differentiation is they're a small company. So as compare, or we would, they're actually medium sized according to BI specifications. So they develop these home communities with playgrounds, trails, community sporting areas, fishing lakes, and they target neighborhoods that are just outside of the city. So they're trying to provide commuter type homes for new home buyers. So they sell their homes under the LGI Homes and Terrata Homes. Okay, so their strengths. So they're focused on entry-level home buyers. They are, so they have a unique direct marketing approach to convert renters to homeowners. They directly target renters, getting them to consider buying a home. They employ an efficient finished spec construction strategy, allowing for rapid growth, good margins, and strong returns. They are not a build-to-order builder, so you can't go in there and say, while they're building, I want this certain type of countertop, I want these fixtures. They are a spec builder. So that means they have 4 to 5 floor plans per community and pre-selected finishes. So when customer looks at a spec home, they know exactly what they're getting, even though they might not all have been built out yet. Okay, so let's see. Their weaknesses and challenges. So if there's a more aggressive, longer lasting slowdown that may impact their model, they have, as an entry-level focused builder, customers may be more sensitive to the economy. So if the economy isn't doing well, then their target market will be affected. They are more highly leveraged than their peers, and they're subject to the macroeconomic environment pressure, but that would also apply to their peers as well. So, but actually some of the larger companies that have economies of scale could overlap more directly with LGIH. Let's see. Okay, so this is by the numbers. Their home, so home sales revenues, and these are financial results of their last annual report. So home sales revenues increased 28.8%. Homes closed increased 21.4% to 9,339 homes. They have closed 50,000 homes since 2003. Their gross margin as a percentage of home sales increased 25.5%. Average home sales price increased 6.1%. Their average home price is around $250,000. Their gross margin as a percentage of home sales increased to 25.5%, and the active communities at the end of 2020 increased to 116 from 106. This is taken from their annual report. It's showing how their business has grown from 2010 and where they're located. So on the left, that was in 2013. You notice the states they're in, like Arizona, Texas, Florida. And now they've expanded all along the West Coast, Southeast. They're kind of going up to the on the Southwest, or yeah, Southeast. So this is showing how they've had a steady growth. Yeah, their IPO was in 2013. I think we've looked at this company a couple times. We've not purchased them. But you notice, okay, so I compared LGIH, the darker line with the S&P 500. They have, except for the areas where, let's see, 2020, you'll notice they took a major dip when COVID hit, but they've been steadily tracking up. And now might be an opportune time to buy because their current PE is currently dipping. Okay, do we have any questions? I know Megumi might have questions because she's the home.
Hey, Joanne, how does it compare to, I think, little larger company DHI?
Well,
DH Horton.
DHI, I know DR Horton. They, I didn't use them as a comparison because they're a much larger company and they have economies of scale and much more. They have a different model than LGIH.
Okay, my another quick question is, from now on, I think interest rates are only likely to go up. How does it affect real estate industry in general?
Well, I don't know if are the interest rates directly going to affect the mortgage rates?
Yes.
Of course.
Well, okay, so that may, because the target market is interest rate sensitive because of they're trying to convert renters into home buyers. So the mortgage payment has to be somewhat close to the renters, monthly payment.
I don't know. I'm not a finance major, but I notice sometimes here and there interest rates, mortgage rates change within minutes of interest rates
Yes.
announcement.
Yes.
At the same
Somebody-
time, though, I mean, it's at such a low rate right now, and people need homes.
Right.
It's going to
So-
go up, up next few
Yeah,
years.
but it's already starting so low.
Yeah.
Of course it's going to go up, but it's at like, I don't know, 15, 20-year mortgage is at 2% now.
Yeah,
So
too.
yeah, it's got to go. I mean, I refinanced like 3 times this year because rates just keep dropping. My point is it's super low. Of course it's going to go up, but these are also
I think this is G. That's going to be a dream number in the future.
Okay. Oh, Joanne.
Yes.
I want to ask a little question. A couple of questions anyway. I'm going to be the kind of the fly in the ointment again.
Okay.
I'm looking at at some of the technicals. The technicals are, I got them from Yahoo on their statistics page. On there, right, the 200-day moving average is $159, where the current price is $138. So it's trading below its 200-day moving average, so the price is depressed. Okay, but I looked at the 50-day moving average, and the 50-day moving average is 149. So in other words, what they're telling us, when the 50-day moving average crosses the 200-day moving average on the downside, because 50-day is 149, 200-day is 159, so it's crossing on the downside. That's usually called the death cross, meaning the price is going down. And if you look a little bit further down on that page, the short percentage of float, the people who are investing in it, 12% of them are shorting the stock because they know it's going down. They know something.
Well, it's been going down, right? It's been,
Yeah.
where's my presentation? I mean, It has been going down. I mean,
Yeah.
so they may have been shorting at this point,
Yeah.
but at some point it's going to go back up, right?
Yeah, but
I mean,
the
it's
interest
not
rates
gonna,
are also going to go up.
well, we don't know that yet.
Well, Powell probably said it will. They said sometime soon they're going to stop tapering,
Uh-huh.
and that means interest rates are going up.
Or holding.
They've been saying that for a while, though, that it's going to go up.
Yeah, yeah. It looks likely that it probably will go up. You know, and the other thing that I also heard, I was reading, market PE. You know, when you take a look at the market PE, on the average historically, it should be around 16. Right now, market PE is about 28. And then historically, you look at market PE, when do crashes happen, corrections happen? It's usually when the PE is around 30. We're pretty close to 30 now. The market is going to crash pretty soon, we think. So it might be a bad time to do that. Usually when a market crash, it's good to have cash on hand because everybody's trying to sell whatever they're holding at that time. And if you have cash, you can buy cheap.
But this
Yeah.
stock is already cheap. It's, you know, PE is less than 7.9. Not sure what it may be. What is the PE?
Let's see.
On this is, yeah.
Oh, it's gone up. 8.1.
Okay.
Yeah.
Still below the average PE.
Yeah. Yeah.
Well,
Oh, yeah, the PE.
interesting. Pedro said, I'm looking at the technical indicators
Yep.
on my own chart, my own technical thing.
Yeah.
In terms of the RSI,
Yep.
it's in the buy zone because it's below, it's at a 40 level. So
Yeah.
it's in the buy zone, and it indicated a buy signal much earlier this month.
Okay.
Even in the slow stochastics, it shows it's in the buy zone. It's in the buy zone. MACD is also in the buy zone.
Okay.
My technical doesn't indicate that it has crossed the 200. I have a 200-day moving average and a 50-day. It hasn't crossed yet, although it's going to meet soon. But that would mean it's a buy, right? Because it shows that it's oversold. And if you're a long-term positive on the fundamentals, it would be a time to buy.
Okay. Let me take a look at a Stewart chart here.
I can share the screen with you if somebody.
I'll give you the screen, Mahesh.
Yeah.
I forgot. Is this are we replacing a stock if we were to buy this? I can't remember.
We're challenging Domino's because the interest rate, I mean, the projected return is lower. So we're trying to find a higher return stock that's got a little bit more potential.
Okay, can you see my screen?
Uh-huh.
Yeah, I got LGI Homes here. The red line is the 50-day moving average.
Yeah, yeah.
The green line is a 200-day moving average.
Yeah.
So it's about to meet.
Yeah.
But if you look at the MACD, it's signaled a buy here. So because you know, when this crosses, now this is the momentum. Well, okay, let's look at the RSI, relative strength index. It's signaled a buy here. So it's below this range, means anything below this range is a buy.
Okay.
And then the slow stochastics is also indicated a buy is going up. It crossed over.
Yeah.
So technicals seem to indicate a buy. I think if you're convinced about the fundamentals, then it looks like a good time to buy. That's my analysis.
But Mahesh, you see
Yes.
the valleys? The valleys are further up on the price chart. Yeah, the valleys are lower lows, making lower lows, right? So it's going down. Okay, and well, you can go, you know, cups and shoulders or saucers. That last little part there looks like a saucer. So yeah, it could be going up.
Well, I think yeah, is going down, but
That's a very good point, Mahesh. One, this is going below, what is that, 50-day moving average. And second thing is MACD, RSI, they're all short-term indicators, right?
yeah.
Okay. Yeah. That's why
Another, this is just a short-term technical indicators. I think fundamentally we got to be convinced that over the longer term, this is a fundamentally good buy.
Yeah.
Which I
Yeah.
think based on the SSG analysis, we think it is.
Yeah.
I mean, the study group thinks it is. Other members may have different opinions, but
Okay.
we can hear.
I agree with that in a totality, but there is only one thing, that is interest rates are going to go up, and it affects real estate industry very strongly negative.
Yeah. Mahesh, Mahesh, another question I'd like to ask, or who's ever covering it. You know, I looked at some of the fundamentals. The current ratio is 4.5, which is, you know, nice, but the quick ratio is 0.4, which is way below what it should be. Okay, and the interest coverage, they cannot cover their interest charges. Interest coverage is unknown. They cannot cover it. And that's one of the reasons why the short sellers are selling it or shorting it. Then I looked at the, go to Morningstar. They give you all those little statistics. Morningstar, I looked at the balance sheet, the annuals, and I'm looking at inventories, at the way they're moving their inventories, and they're not. Inventories are building up, meaning they're not doing too much business.
Joanne, you want to attempt?
Yes. So the reason why they're not building up inventory is because they're not able to keep up with their sales right now.
Oh, okay, yeah. They're just not going out and building stuff. So their inventories are building up.
But they have a backlog of people that are still signing contracts.
Okay.
Waiting for their homes.
Yeah.
I think there's a material, all the delivery that's going on right now is impacting them.
Yeah. Would it not get worse under high interest rates?
Well, you're saying there's going to be an immediate impact from, I don't know how quickly they'll raise the interest rates.
Yeah.
I mean, even if it's 4%, double what it is now, that's still fairly low.
Yeah. Okay, but just playing the devil's advocate.
No, that's good. You're good. You need to, that's vetting the stock.
Yeah.
Okay, so you know what we're going to do now? Who actually did an SSG for the stock?
I did.
Okay, can we look at your, okay, so first we'll look at mine.
Okay.
Okay, so I selected 11% for sales because I tried to find out from the analyst reports.
Yeah.
And the only one I could really find is this 16.1%. And then the one from the small stock informer, which had 11. So I went with the lower, and when they were talking about, they actually did an SSG on the small stock informer, and they used 11 to be on the conservative side.
Yeah.
Is that what did you use for?
Okay,
sale?
for sales, I also used 11%.
Okay.
Yeah.
And then for the historical EPS, I used the preferred procedure. Did you use that?
Which was?
8.2.
Okay, I used 15. Yeah. Now the reason I used 15 was because Yahoo had it 14.8.
Yeah, I saw that too. But what I understand is to be more conservative when you're
Yeah.
buying the stock, and then you can be more positive when you own the stock.
Okay. Now, the other reason I used 15 was because Morningstar had about 40%
Yeah,
for 3 years.
yeah. Okay. I wouldn't have when you do an initial SSG. I just read attended Ann Cuniz's presentation. She suggested for initial SSG for the EPS not to exceed the sales. So if I were to change this, I wouldn't change it more than 11.
Yeah.
Okay.
Okay.
Okay, let's look at, and notice that their management is doing very well with the pre-tax profit, return on equity. Okay. Okay, I took out 2020. I didn't think those were realistic. They're not really part of the trend that's going on.
Yeah.
But on that note, the average high PE, I kept it at 11.
Yeah.
And that gave me a high of 285. And then I also noted that the current PE is lower than that average PE, so that showing there's room for expansion. And then with my selected low price, I went with the calculation.
Okay.
So is that what you went with? What did you select for high PE?
Okay, for the high PE, I put 12.5. And the low PE, I put for 5.1.
Why did you pick 5.1?
I think look at the historic.
Oh, because you.
Yeah, 5.9.
Okay.
5.2, 5.1.
Okay. Okay. Let's see, and then that put me in the buy zone with a 15% return, high PE, and a 9.1 average PE. So what did you get for your return?
Okay, now I got a high price of 440, right?
440.
And 440, and I got a low price of 89.
Okay.
And an upside downside ratio of 6.1 to 1. So my return was about like 10%.
Okay, so my understanding is that when it's upside down ratio is high like that, like 6, that you need to look more closely at your low price. So your low price is, what is it? Which 81?
89.
So that's, let's see, 89. I want to see what that is as a percentage of our current price.
Yeah. So 10, 15, $30, $30.
So that's like 60. Go ahead. Did somebody want to say something?
Yes, this is ready. I have one question.
Yeah.
I think who is the other gentleman who was talking? That's Spiro?
Yeah.
Spiro.
One thing, okay. The 2020 EPS seems to be unusual. 2020 earnings per share. Looks unusually high, and is that could be a 1-year benefit, or is it can be predicted to go further in the future?
I don't know. Earnings per share, why is it so high? Could be a one-time thing, kind of might be the outlier.
I think we should look at that in a little bit more detail, because your low price goes way up because of that.
Because of the
1-year benefit, 12.76.
Okay,
Current TTM became 17.52.
Yeah.
So your low price, even though low PE is okay, estimated earnings per share is 17.52. Your low price predicted will be high because of that number, 1-year number.
Yeah. Okay, well. Yeah, we have to look at it more closely. We might even just eliminate it for that 1 year because
Yeah,
it's out of character too. Yeah, I see that.
yeah. Is this there is something that the stock purchase or something they did?
Yeah. But anyways, Joanne, the 20% below the current price would be about $100, and my figure $89 is certainly under $100. But a 6.1 to 1 upside downside ratio is a little bit high, and
But see, yours is like 40% below.
yeah.
Mine,
So
so I get 20% below is 113.
yeah.
So
So
mine's even lower than the 20%.
yeah, I
But
think
yours is way low.
yeah,
I mean,
I
yours is
think
lower than the low this year.
yeah, I think because of my growth 15% earnings per share growth rate that pushed my high price to 440. So if
Yeah.
I lowered,
I think that's aggressive.
yeah, probably yeah.
Yeah.
But I looked at the numbers there, Yahoo 14.8 and then Morningstar 40. Zacks didn't even comment. NASDAQ, it gave 5%.
Right. But you probably should not have your earnings higher than your sales as doing a initial.
Yeah.
Okay. Is there any from the group? Does anybody have any feelings of if we should change any of these estimates, any of these judgments?
I think, John, the estimates look good. Only thing is you have to promise that you will hold on the interest rates.
I'll talk to Jerome. He's on my speed dial. Let's see. Did anybody else do an SSG? No. Okay. So that's probably something we're going to want to talk about later for business discussion. That according to our articles of agreement, I think we're all supposed to do an SSG on the stocks being studied so that we can participate in the discussion and have a more knowledgeable understanding of the company and have I think a better discussion. Does everybody agree on that?
Yes.
I agree, and I did some homework. That's why I was able to ask these questions.
Yeah, but did you do an SSG ready?
Yes, I'm displaying on my screen, third screen.
Okay.
I also agree, but the reason why I didn't do it because I already have another company, so I don't have a plan to buy the same the same
Okay, next.
company.
I mean, we're just introducing it this month, but we would really like people to do well, and it's also the stock study team has to get the stock study out a week before. We were late on that. Apologies for that. We had some issues coordinating meeting time, but that will give you all a chance to. And what we've done is we pulled all the research, so you don't have to look up the analyst reports, the value line. We've done the first cut, so you could do a review of the first cut of why we justify our judgments, and then just go ahead and do your own SSG. That would be great.
That sounds great.
Okay. And then we can have a better voting. I mean, more confident in our voting and our selection.
Yes.
Okay. Should we move on then? What's the next?
Just to give a little bit more notice, John.
Yes, I explained, Reddy. We were delayed in getting our information out.
Okay.
Okay, so let's, Mina, do you want to go through the?
Right, so we have, looks like 4 companies. Well, I don't need the screen, thanks. It looks like there are 4 companies that are been identified as potentially overvalued. So I think we have Schwab, Piero's watching out for us. Domino's was identified. I think we've gone through that. FLT as well as Qualys have been identified as potentially overvalued companies. So I'm not sure if any of the stock watchers or the peer reviewers have any comments about any of those 4 companies.
I will do a quarter. I will talk about FLT, waiting for the next quarter, and then we can
Okay.
decide whether.
Yeah,
What should we do
FLT and
about
Qualys are next month's report.
So Schwab actually. So it looks like everybody's reporting a 3rd quarter of the next
Yeah.
Cool.
next month.
Interesting. Qualys, like 2 months ago, we were just saying was undervalued. Now, they just because they're doing well, now we consider they're overvalued. I guess we can take a look. Yeah, their price did go up. We can take a look. Waiting for Chris' report. I'm the peer reviewer
Okay.
on that one.
Sure.
All right.
We is Pierre, do you have any comments on Schwab, or is it also something that we're going to tackle next month?
On?
Schwab, I believe.
Oh, Schwab. Yeah. Well, you know, they just reported their earnings, right? And their earnings were 84 cents. The market was expecting 80. So we beat they beat the market. Schwab beat the market. The second quarter was 59 cents. So, you know, on my SSG, I projected an 11% growth rate, and it just blew way past that. It blew like 75% from 59 cents, right? It blew past the analysts as well, who are better knowers, or better in the know. And like I said in my little email, Schwab predicted or assessed that it would take them about 18 months to fully absorb the TD operations, and 18 months will put it into the second quarter of 2022. That's when we'll see the synergy of the 2 operations working together. And it looks, you know, it looks good. Everybody likes it because they've achieved size, and they're competing with the big boys, you know, JP Morgan and all the other Chase and all the other things. So it looks good.
Okay, great.
Then we'll just have to wait and see what everybody thinks in a couple of months.
Perfect. Thank you.
Yeah.
So the next issue is, I know Jay was mentioning that Anne was initially to chat with us today about how to deal with outliers, but in fact, there's a ticker talk that will cover that topic on the 28th. Is that correct, Jay?
Yes.
Joins.
Okay. So Carol Thine, she had actually made a comment as our mentor at one of our last sessions about how that we need to more clearly define our outliers, why we're striking out outliers. And so she was going to come and talk to us about outliers, but Ann Cunias is actually doing a ticker talk on October 28th. So I encourage people, and if you click on that link, it'll take you to the registration. And Carol said if we had additional questions after that ticker talk, that we can invite her back as a follow-up.
Great. So maybe then we invite all our members to take a look at that ticker talk before the next meeting, and maybe we can have we can include a quick discussion, and if we can prepare any follow-up questions for at that meeting then. Perfect.
That'd be great.
Perfect. The other issue that in terms of club business that we need to address, and we sent around the proposed motion just yesterday, I believe, about potentially adding an advisor role to the articles of agreement and to the executive team. I think there's been a couple of back and forth emails on that subject, but the purpose that the executive is proposing for this advisor role is to make sure that all our, on a meta level, that our portfolio and our approach to investment is consistent with the better investing principles. Namely, are we investing in companies that meet the criteria, as well as are we treating our portfolio in a way that's consistent with those methods, including are we holding for appropriate amounts of time, are we making the right decisions. So I think we've identified the fact that several companies have been purchased and sold in relatively short periods of time, and that's obviously sometimes led to unrealized gains and profits, and it isn't consistent with the better investing model. We also have several companies that are that constitute less than 5% of the total portfolio, something else that we're striving to bring into consistency with better investing. So the purpose of the advisor role would be to keep that meta overview of the club's performance, to ensure consistency with those principles. So I'm not sure if members had any thoughts after reviewing the language about the agreement, thoughts, any questions, concerns.
I'm wondering if these two motions might be candidates for the Slack conversation. I don't know. Did everybody review these motions, or do you need time?
I reviewed it today.
On the club advisor question, I need more time.
Yeah.
I did not hear that concept in BA clubs that I'm involved for last many years. I'd like to do more homework and even consult Doug Gerlach on that.
Okay, so actually the reason why we're doing this, Reddy, is because we're not we're a fairly new club, and we have people in executive positions that may not have been BI members before or be familiar with the BI fundamentals, like really like know it like they're experts. I mean, Ann Cunha says she's 15 years. She's been doing this 15 years. So she knows what she's doing, but she advises beginners to do, stick with the fundamentals. So I just want to make sure that we're not teaching beginners non-BI fundamentals. We want to make sure everybody's got a solid background in BI fundamentals. So that's the role. And so it's actually not, you're right, it's not a BI position, but it's something I think a new club needs, just to make sure we don't, I think that's one of the reasons we started veering off track and looking at stocks that don't meet BI fundamentals, and we purchase stocks and then we kind of are having trouble.
I agree with the concept of introducing the new member and training. You have done excellent job. For example, with me, I'm really serious about you how excellent job you did me to introduce to the club. Okay. Mentorship is the mentorship is same as advisor?
No.
I did not know.
No, the mentor helps you navigate through the club, logistics, the drive, the forms, the way we do things.
Okay.
So why don't we use these? We create a channel for each of these, and then it can be open for discussion.
Well, I've got some comments.
Okay.
I've seen advisor roles in a number of organizations, and normally they do that to add some credibility to their operations. So this is like fund managers, private equity firms, and all that. They do have an advisory board or a panel of advisory that advises the board. Here we are actually confusing things, because it's quite odd for a member to be an advisor. Are we creating, first thing is, it's not clear, are we creating an executive position? That means this becomes a regulatory compliance position where the advisor is now the compliance head of an organization to ensure that BI philosophy is followed. I think that's not quite clear to me. I mean, and are we passing the buck on the advisor to make sure that we stay true to BI investing principles, when actually the decision-making authority from all the investments is actually the majority of the members?
No, I think, Jay, do you want to answer that question? Oh, is Jay not there?
I'm here. I'm processing what Mahesh is asking. We, the reason
I'm
was
not clear
just
the role. I'm not clear. No, I'm not clear whether you are what is it that you will achieve, because ultimately the decision body that decides is actually majority, right? Majority decides whether to buy or decides whether to sell. So
right. That's correct. Nothing will change that.
yes.
The reason was just what Mina stated. Actually, combination of Amina and Joanne. We are a fair new company, club, and the last couple years, what I have noticed that we buy sell something very rational and we sell quickly. Also, I just felt that with many more new members, we want to make sure we follow better investing principles, investment methodologies. Henny suggested this can be a executive team's role. We can approach that way. I just my point is we just want to make sure.
So Jay, if I were to
yeah.
ask you, looking at today's proceedings, do you think we have followed better investing principles?
Yes. For example, I just thought it was great, Mahesh. It sounds like you are very, it's technical. BI started introducing technical analysis at the bank. I heard used to be they are very so against it. Now they started having more classes as technical analysis in their bank class or any other webinars. However, BI suggests that want to make sure using BI fundamentals to find the quality companies. Then we can use technical to add on to sort of like gauge or validate if there's a right price to buy or I will say we are today. I thought today's meeting discussion was great. Reason why we're talking about this rule was I was looking at the past. I just felt, especially that we have a new members, they are very new to better investing, and some of us may not, even though I've been in BI for 7 years, I'm right now on the executive team, but I may not always be able to. So we just kind of want to make sure have somebody have a bit more experience. That's another reason why we have a mentor, because we felt like we're so new. We have this new concept that ready to ask a question. BI, no, I don't think any other clubs have this mentor role, and we just introduced the mentor, club mentor to us. We just want to make sure what we are doing, we know what we're doing, and we really take seriously about our investments, even though as a club, we invest hypothetically, not real money, but we invest real money after the meeting. We just want to make sure we take things seriously.
Okay, hear you.
Yeah.
Thanks.
Is
So
it
Jay,
necessary? I really do not know if it's necessary. I don't know. I just, yeah.
Well, it's going to be, Mina's going to make a Slack channel for that motion, so we can discuss it over that.
Right, absolutely. And I mean,
I thought we are doing, again, see, I think we need to stick to the proper governance, because we introduced Slack as a trial, and now we are using Slack to make decisions. We are actually, in terms of governance.
no, I don't think it's, yeah. I don't
Yeah.
think there's a decision made. I think simply we can use these motions as the subject test matter for Slack. So we can actually have a substantive discussion while trying it. If it's successful, we can report back that we found that both Slack was successful, and now we actually have had some discussion about the motions. So
Okay.
maybe we're just doing the two things in tandem. I don't think Slack, we won't make any decisions on Slack. This will simply be a way for us to communicate so that a lot of the questions back and forth, the thinking out loud can be done between the meetings. So when we come to the meeting, we have, our thoughts laid out, the homework has been completed, people are ready to, put their position on the record and vote. So I think nothing will be decided with the Slack. And Mahesh, I think you also brought up a good point in terms of the advisory role, and you asked the question, what do you expect to achieve? And I think that's that's an important element. Was we need to establish material benchmarks for this position if we are going to institute it. And I think the way I envision it, and Jay, Joanne, please intervene if you think I'm wrong. I imagine it almost as how we had the portfolio review. So the advisor would take a look at our portfolio and our actions, and on a large overall scale, and present to the group their findings as to our consistency with the better investing principles and our compliance with those principles, to maybe identify areas of concern. We've been selling companies a little bit too quickly, or we've been purchasing companies that are a little more speculative than we should. That's how I envision the role working, almost as a portfolio management tool, and that could be presented kind of at every meeting in a 10-15 minute summary way. But that's my 2 cents.
Did everyone get an invite to the Slack channel? Slack invite? Email the
Not
Slack?
yet. Not
I
everyone.
sent it to, yeah, I did.
I sent it to
Mina.
Megumi as well, I believe. I
Megumi
have
didn't.
everybody sent it about, I think, 8 members initially, just to see if everybody could accept it. Could everybody connect? So far I've only had Jay and Joanne, maybe 1 or 2 other members have actually accepted it.
When did you send it?
I just joined.
Just
This
now.
would have been sometime last
Oh,
night. So I don't think I invited you, and my apologies for that.
that's
But
okay.
I'm going to send a fresh invitation to the full group. And so maybe if you don't have that email, I'll just send it probably in the morning, and
Okay,
you'll be added tomorrow for sure.
sounds good. Thanks.
Thanks.
Do we want to do any motions before we close the meeting?
Do we have any monies to buy?
Yeah, we
How
have
much?
like
Sorry, we
5.
do have money.
$5,000.
And
We
then
have
there's
5,000.
there's
We have
Domino.
we have close to $5,000 for the 49.50 or so. It's a good time if you want to buy stock. Otherwise, we have to wait 1 more month.
So
Oh, we sold eBay and Comcast. Okay.
I thought because we did a consumer cycle challenge and we came out identifying Domino's as a stock to be challenged, and we found LGIH as a potential challenger. So shouldn't the motion be a motion to sell DPZ and a motion to buy LGIH?
Yes.
That's what I would
Because that's
think.
the purpose of having a cycle. I mean, members can agree, disagree, but ultimately this is what is
Yeah.
the ultimate output of our sector challenge, right?
Yes.
Yep.
Yes.
So does anybody want to make a motion, or are we not?
What was our Domino's return so far? Did you guys remember?
Ready or Tom?
Ready? We have 3 people own Domino's. I don't. I'm just curious to get input from these shareholders, what they think about Domino's. What's our return? I remember that company was doing well. I don't remember what was the return was.
I think Domino's is a good company. It is a very popular company, and there's not much competition. But if you want to sell, I know the SSG is showing. Not sure if you have looked at all other analysts' opinions, but fine.
I would make a motion to sell Domino's on the basis that we're not buying it as a club. We can't. We don't have the skills to assess the debt issue and the share buyback. It always hangs up people.
Was that a motion?
That's my
Yeah, that
motion.
was the motion. Can I second it?
Yes. And now we have discussion. Is there any questions about Domino's? We're at like 2.
Let's vote.
We're at
Let's vote.
2.7% of Domino's, and we have not ever been successful in getting it up to 5%. So since it's low, then it's not worth following.
Okay. Yeah, I think the housing company sounds good to me.
Okay, wait, but let's stick with
Oh yeah,
Domino's.
Domino's,
Yeah.
because I'm
Okay.
still looking for returns. I'm sorry, I'm just
Okay.
curious the return. I'm still looking.
Nina, are you setting up the vote, or do you want me to do it?
Selling Domino's, we get about almost $1,800.
What's the return so far?
Return is
Gross. Oh wait.
Groceries. Well, it was bought at 257, and it's now what, 450 or something like that.
Wow. Okay, I found it. Okay, Domino's. Oh, at 79%. So 2 years, exactly to October 22nd, to October 2019. So 2 years, we made an 80% gain. That sounds pretty good. Yeah, I guess. Okay.
So is Mina setting up the vote?
He hasn't said anything.
Who's setting?
Sorry, I
he
was
not?
away
Okay.
from the computer for 1 second.
Are you setting up the vote?
No, I saw it. I had to step away
My
for a
iClub
quick
vote?
second. So if you could set up this one
Okay.
just for expediency, please. Thank you.
So it's sell all shares of DPZ,
Mm-hmm.
and that was made by Tom,
Right.
seconded by Jane. Close voting sooner if majority is reached. Simple majority. No. Okay, does that look good? I think so. Okay.
I can hear there's somebody's TV in the background.
That's me. I don't know why
Oh.
my TV just came on. That's weird.
You have a smart TV.
I don't know. There's a ghost in it. Okay, Jane voted, Megumi voted, Tom voted.
how do I vote so quickly?
Already sent out. Okay.
Joanne, how do I vote so quickly?
Oh, go to log into my iClub and click voting.
I am in there.
You should have gotten an email to vote. Did you check your email to vote?
Oh, okay, I just got it. But I'm in my iClub, okay.
Yeah, iClub is the fastest way to do it.
Okay, voting, okay. Yeah, I go with Tom's proposal.
Okay, well, while we're waiting, does anybody have another motion? Actually, that motion passed. Okay.
How about, I thought Mahesh has a proposal to buy LGIH, right?
He didn't say anything.
Yeah.
Mahesh.
Do you have a motion?
Joanne, I'm trying to put words in his mouth.
Well, it's not. I think that's what the sector challenge, right? That's what we did, right? We agreed.
Yeah.
So we need a motion. Go for it.
I mean, that's why we have a team that looks at the sector challenge, and we actually came out this and.
So make the motion.
Yeah. So make the motion. Let's move on.
Somebody needs to actually formally make the motion and second it.
Yes.
Okay. So I can make the motion.
Yes.
And what is the motion? How much of LGH? The dollar amount.
Well, with tonight's deposit, we will have close to 5,000.
So I'm
What,
going to put
what,
down
what
cash.
brings this
Well, we'll
up
make-
to 5%?
Up to
Guys,
5%.
I think that's right.
Well,
That's
no, cannot find
people
3%, minimum of a 3%. So how
Minimum.
much is that 3% for that?
I
Oh,
thought
what
it
was the percentage?
5%. I think it's 5.
5%? Okay,
Five.
5%. 5% will be what? Let's see.
That's going to be difficult to achieve with every brand new purchase, but
Yeah.
just given the size of the portfolio over time. But
Well, we
I'm not
just
sure if
sold
1,000 even would.
Domino's. What was that?
Yeah,
Well, 2.7.
2.7.
So we need to buy more than that, double it.
So do we have a dollar amount?
Well,
Just 5%?
5%. 5%.
Do we have enough cash to make that
Do we have
purchase?
enough money?
Yeah.
Well, we're
Okay,
gonna
make a
have
motion.
7,000, almost 7,000.
Mm.
Yeah, well, and right now,
Okay.
let's see.
Domino's is
has
2.7.
Yeah, so,
So we should have enough.
yeah.
Okay, so the motion will be to buy
5%.
LGH equivalent to 5% of the total portfolio. 5% of our portfolio, current portfolio value. I'll write this one out.
Oh, you got it? Okay.
Yeah, I'm logged in now.
Oh, you
Sorry
got
about
it.
that.
Okay, all right.
Current portfolio value. So I had the motion is made by Mahesh. I don't know necessarily who seconded the motion.
I'll second it.
Hold on, what is the motion?
The motion would be to buy LGH equivalent to 5% of the current portfolio of our current portfolio value.
Current portfolio includes tonight's membership deposit and sales
Yes.
of
This would
sales of
include the deposit as well as the proceeds of the sale of Domino's.
Okay, I'm calculating that now, plus 1,500 plus, I think 1,800 times 0.05 is going to be roughly 3,800. Okay, you want 3,800?
Sure.
Okay, I can buy 3,800 of LGH.
3,800 will be roughly about 27 shares. I like to buy, instead of dollar amounts, I like to buy round number shares, but that's all up to the club.
No, that's fine.
As long as we have 5%.
How many?
Okay, so yeah, how many shares was that? Was that 27? I think I heard.
I think 27, that includes tonight's membership contribution and the sales of Domino's Pizza.
Okay, perfect. So I'm gonna make the motion so I have a motion by, is it still by Mahesh? Mahesh, are you endorsing the motion 27 shares of LGH?
Yes.
Okay, and sorry,
yes.
I missed who seconded the motion.
Joanne.
So let me
Joanne,
see
thank you,
if I have
Joanne.
that much cash.
Yeah, ready, we're okay, that logistically we can make this motion happen if it's passed. Okay, I am sending the email now.
Yeah, we have 5% cash. We will have
Perfect.
5%. And,
Perfect. So the motion should be in your iClubs or in my iClub, or if you should also receive an email.
we will still have some more cash balance after that.
Excellent.
Can I round this off to nearest share numbers instead of dollar number?
Well, the motion was for 27 shares.
Oh, 27 shares. Okay.
Right.
Okay.
That's what you, right?
Yeah, 27 shares. I think
Of LGIH.
today's or yesterday's price was 138.6. Okay. Okay, that's fine.
Megumi, did you also recommend to trim Facebook? There was one email from you.
Yeah. But
Or
I
do you
have
want to wait? Okay, go ahead.
yeah, I have a third quarter report next
Yeah.
month. So
Okay, so wait till
Yeah.
after
Yeah.
the quarter.
yeah.
Okay, so we are over the time, so we probably should adjourn and get to
Oh.
our.
Mm.
Mina, did you want to adjourn the meeting?
Oh, yeah, just give me one moment, please.
Father, no.
Sorry, I just had to, my hands were busy there for a quick
Okay.
second.
Okay.
All right, and the meeting is officially, wait, oh, pardon me. Not as smooth as I thought. All right, and the meeting is